Hey, Abby, this is Ryan from TrendLizard. I hope you're having a great night. Thanks for being a member of the TrendLizard community, and thanks for sending me an email. I'm going to take a look at 3 tickers for you tonight. You sent in Alibaba, PayPal, and Salesforce. We're going to take a look at all 3. Going to start from the top. We're going to take a look at Alibaba. This is not one that I have analyzed on a video before, so a good call. And actually, I think the other 2 are fresh as well. So we're going to take a look at all of them. Here's Baba. It was incepted back in 2014, had a little up-down move, and then things got really interesting off the 2016 low, basically. From that point, we embarked on a very large 5-wave advance, or Baba did, not me personally, a 5-wave advance into the 2018 high. It gave us a very large, sharp 3-wave pullback, but we know it's a counter-trend move because it's been completely retraced, and because it's a 3-wave pullback. Found support in the Fibonacci, the yellow Fibonacci support area, and off of that low in late 2018, Baba has been on a pretty nice tear, going from about 130 up to 307 at today's high, October 16th, 2020. So the action off of this low in 2018 looks bullish. Here's one way to look at it, okay? So the trend is clearly up on Baba. So that tells us to be looking for 5-wave moves. Now, if we look at the advance off the 2018 low on Baba, we see what looks like a 3-wave move to the upside. It should become a 5-wave move before it's complete. So to us, that's a bullish thing on the longer time frame. Eventually, we should get a 5-wave move off of that 2018 low to the upside. So currently, off of the 2020 low, we appear to be in the 3rd wave advance of that 5-wave advance that began in late 2018. So let's go ahead and zoom in and take a look at this action off the 2018 low here. This gives you a closer look. It shows you why I've labeled it the way I have. It was a little bit of funky in 2019 and early 2020, kind of a running correction, but that is what we believe it was, because if you look at this advance off of the mid-2019 low, it's a very clear 3-wave move. So that tells us it's not part of the trendy advance. Instead, it's part of a counter-trend pullback, and that's why I've labeled it as a running second-wave correction that completed in March's low and then kicked off to the upside there. So what we really care about at this point in time is what's happening off of the 2020 low, and I've said that in a lot of videos lately because really it is what's important once it completes. Given the size of the move, not many people who watch these types of videos are going to want to be sitting through a larger pullback once this up leg off of the 2020 low completes, and it looks like we could be getting closer to a high to the advance that began in March 2020. So you can take a look at this up leg here. We'll take a closer look at it, but you can see that it took a pretty clear 5-wave form. It appears to be in the 5th wave of the advance off the 2020 low. When this up leg completes, it's going to give us a larger pullback, a correction of this up leg off of the 2020 low, and that could be a substantial move that, again, I wouldn't suspect many people would want to sit through. I would imagine you would want to exit and wait for that pullback to complete before you trade Baba again. So let's go ahead and zoom in just on this action off the 2020 low. This is it. This is the 5-wave advance I was discussing on the previous chart. You can see it in all its fine, beautiful detail here. The first wave up is a little bit funky, but it's a 5-wave move, a 3-wave pullback, a very clear 5-wave move for wave 3, a 4th wave pullback in September when most things pulled back, and now it is in a 5th wave advance off the September low. Very similar to what we're seeing on the stock market indexes in the U.S. We're seeing it on semiconductors, which I analyzed last week. We're seeing it in many places. It looks like we're in the final movements of the advance off of March's low, off the 2020 low. So currently, it's bullish. 5-wave moves are trendy moves, and trendy moves are bullish moves, so that's a good thing. But the second this 5th wave ends, you have to be careful. You have to think it's time to go and get out of the way because, again, a much larger pullback will be indicated. Specifically, we would be looking for a pullback down into this yellow area here, which runs from about 260 down to about 225. So once this 5-wave advance completes, we're going to be looking for a pullback down into this area that should take at least a few months to play out. It would be a move that would be correcting this 5-wave advance, and to do that, it would probably take at least a couple months, maybe 3 or 4, to fully correct this advance off of March's low. So you can be bullish now. The second you start seeing a crack in the dam and you start seeing more notable weakness that actually sticks around on Baba, I would be careful. I would consider it the sign of a high. As far as hard levels are concerned, a move below 280 would be your sign that this 5-wave advance has completed and a much larger pullback has begun. I would look for a move into this yellow support area, a 3-wave move to eventually play out, again taking several weeks, potentially up to four months to play out. And then once you start seeing strength emerge from this area, then you have a buying opportunity on BABA. So there's BABA. Let's go ahead and move our focus now to PayPal, the second ticker that you sent me. This is it. It was incepted back in 2015. Excuse me. Chopped around for the first 6 months or so of its existence, and then in early 2016 it got going and gave us a very nice, clear, beautiful 5-wave advance into the 2019 high. PayPal stalled from there, pulled back, gave us a very clear ABC pullback. The breakdown, the COVID breakdown in 2020 fits as a perfect C-wave down, and then just look what this guy has done ever since then. Off of that low in 2020, it's gone from a little bit above 80 all the way to about 210, closing at 204 today. So this is obviously bullish. There's only two types of price action that have happened on PayPal in its existence, and that is trendy upside movement and counter trend downside movement. And obviously, that's a formula for higher prices. It means that it is still in an uptrend, and eventually it should give us a larger 5-wave advance, with this being wave 1, this being wave 2, so on and so forth. So let's go ahead and zoom in and focus on what's going on off the 2020 low. This is what we're looking at here. Like so many other things, like I just stated on the last ticker that we looked at, it looks like we are still in the advance off of March's low, but getting closer to an end of a 5-wave move that will give way to a much larger pullback. So off of March's low, we see a second wave, what looks like an extended third wave, really no large pullback over the extent of this entire multi-month third wave advance until September's high, which we consider a fourth wave pullback, and then the advance off of September's low appearing to be the start of a fifth wave advance to the upside. Now let's go ahead and zoom in on this more approximate price action to determine when this up leg off of March's low might complete. Here's what we're looking at. Off of September's low, we already see a pretty clear 5-wave move off of that low. You can see the 1, 2, 3, 4, 5 into the high earlier this week. Now off of this week's high, PayPal has pulled back and quickly recovered. So it's obviously showing some buoyancy right off the start. To me, I wouldn't buy this immediately. It looks to me like it could be in what would be a larger 5-wave advance for wave 5 if we step back out, this being wave 5 to the upside. We could be getting a larger 5-wave advance to the upside. But here's what I think should happen. I think we should get a larger pullback off of this week's high, a second wave correction, ideally somewhere into this yellow area. If it stays above 185 and you start seeing some strength out of this yellow area, it's going to be a great buying opportunity. It's going to look like the start of a third wave advance, definitely a buying opportunity that you should take advantage of. But the key is 185. PayPal needs to stay above 185 at all times. If it moves below 185, you'll have to consider the possibility that this 5-wave advance off of March's low has already completed, and that a much larger correction is going to take place down to the 130 to 160 area on PayPal. So again, it looks like we're going to head higher, but I expect a pullback in the very near-term time frame. As long as it stays above 185, you can buy strength from there. But if it moves below 185, it's going to look like a more important high, and I wouldn't want to own it until it goes down into this yellow support area to correct the 2020 advance. So there's PayPal. Let's go ahead and move on to Salesforce, ticker CRM. It was incepted back in 2004. And like the other stocks you've sent to me, it's been bullish in the fact that it has given us trendy up moves and counter trend pullbacks pretty much every step of the way. There was a clear 5-wave advance off that 2004 low, a very large pullback in 2008. You might remember that one, the financial crisis. Since then, it's been in a very large trendy up move off of the late 2008 low. Gave us a first wave, a second wave, a third wave into the 2019 high, a fourth wave pullback, and appears to be in a terminal fifth wave advance in 2020. When the advance in 2020 ends, this fifth wave advance, we have to be concerned about the possibility that this entire advance that began way back in 2008 will be corrected. So that would mean a much larger pullback that lasts multiple years, put Salesforce on ice for a little while, and is in a position where you're not going to want to trade it because it's not going to be easy pickings like it is when it's in a massive decade-long uptrend as it has been since 2008. So let's go ahead and zoom in, take a look at this action, a little bit more approximate action here. basically what's happened since 2015. This takes a look at that action just to drill in a little bit. It shows you the fifth wave of wave 3. You can see a nice 1, 2, 3, 4, 5, fifth wave advance. The reason I zoomed into this chart is just to show you how I'm labeling this move here off the 2019 low. We have, like we have so many other places, an expanded ABC pullback, wave A down, wave B up, setting a new high, but still a counter trend move, and then a sharp C wave down that has kicked off the massive fifth wave advance off the 2020 low. So basically all that matters to us is the advance off the 2020 low and when this move completes, because when it completes, we're not going to want to be around CRM, because once again, it could at that point mark an end to the entire advance that has lasted over 12 years. So let's go ahead and zoom in and look at the action off of the 2020 low. This is it. So it's possible that it's at a high. I don't think it is, but we also can't rule it out. If you look at the advance off of March's low, you see a 5-wave move to the upside into September's high. Since then, it's been pulling back. It's shown some strength in October, but it still hasn't proven anything. Now, if you own CRM, you can be bullish on this guy as long as it's trading above 245. But if it moves below 245, it's an indication that the pullback that began at September's high is not yet over. That opens the door to a much larger pullback. Even if it's just a correction of the 2020 advance, it would point CRM down to this yellow support area shown here. But if it's more important, again, if it's an end to the entire 5-wave advance that's taken 12 years to play out, this thing could head significantly lower than that. So if it moves below 245, my recommendation would be to be out of this guy, because it would open the door to a much larger pullback, again, into this yellow area. And if it continues down from there, then you definitely don't want to own CRM, because it could be correcting a 12-year long advance. So that's what we're looking at. You can be bullish now, but a move below 245 has to be seen as an indication to step aside and let CRM develop before you make your next move here. So I hope that's helpful, Abby. Again, thanks for being a member at TrendLizard.com. As you know, we do this stuff every day using Elliott Wave and applying it to anything we can that is widely traded and is a good representation of social mood. Because when we do that, we can find out where things are going to head, and that tells us how to trade it. So have a wonderful weekend, and we'll talk to you very soon. Take care.